Joining us for an exclusive interview, JetBlue CEO Robin Hayes, along with our own Phil LeBeau. Great to have you with us, Robin. Thanks so much for joining us.
Hey, Wilf.
I wanted to start on that point about the forecast for better holiday bookings. Is that sort of regardless of case count, or as we see spikes in cases, is that how much more of a spike in cases do you think would derail your hopes for the holiday quarter?
Yeah, no, thanks, Wilf. Phil, good to be with you again. No, I think what we shared our earnings call this morning is that we continue to see a fair bit of interest for travel around the Thanksgiving and holiday period. I think you got a lot of kids coming back from college. A lot of people are sort of seeing friends and family. They haven't seen them for a long time. And so far, we've seen the booking curve go a little bit further out as we look at the Thanksgiving period. In terms of case counts, we've been in a rising case count here for a couple of weeks. And so far, we haven't seen an impact on bookings.
You also said today that the industry recovery is not possible until we have rapid testing. Can you just elaborate on that for us a bit? Is that in the short term, or is that even when we have a vaccine, we'll also need rapid testing? And how far away are we from having the quality of testing, the pace of testing that you're alluding to?
Yeah, no, a great question. Our thinking really as we think about 2021 and how the industry recovers, it's going to be a question of, you've had a vaccine, you've had a COVID test, or the ability to rapid test either preferably before your flight, but maybe on arrival. So we think it's going to be a combination of things, giving customers as much flexibility as possible so they can get on that airplane and feel really, really good about the safety of their trip and customers around them.
In the meantime, Robin, it's Sarah. We're not there yet. So you were blocking off the middle seats. Are you still promising people that you will do that when they book their holiday reservations? And what's the calculus there? How do you make that economic decision?
Yeah, so as we've talked about before, blocking seats is very expensive. I mean, we've really done it as one of the many things that we've done as part of our Safety on the Ground Up program to restore customers' confidence. What we've said is we are still blocking at 70% through to December 1. So we are selling, some rows where people are flying together in a sort of a group of more than two. Our average load factors are still over 50%, so most flights are not full. And we haven't made a decision past the 1st of December yet, but people can travel at Thanksgiving knowing that their flight will be capped at 70%, below 70%.
Robin, it's Phil here. I have a question about your daily cash burn. You were at $9.5 million a day in Q2. You brought it down to $6.1 million a day in Q3. You're hoping to be between $4 and $6 million in this quarter, the fourth quarter. When do you hit break even? Is it in the first quarter, or as we see the case counts increase, does that get pushed out a little bit?
Yeah, I mean, it's really hard to tell, Phil. I mean, a number of airlines, I think, made predictions a few months back about the end of the year. We didn't do that. I mean, of course, we want to get back to cash burn neutral as quickly as possible. We were generating about $22 million a day before we went into this pandemic. We need to get to between about 13 to 15 million a day to get back to that cash break-even point. And right now, we are closer to sort of 7 to 8 million. So we still have a way to go. Hence all the focus on flying to the geographies that are recovering quicker, focusing on the leisure and visiting friends and family market, and some of the safety from the ground up measures that we put in place to make people feel confident about flying.
At the same time, you're cutting your CapEx by $2 billion by pushing out the delivery of certain aircraft over the next couple of years. Is your anticipation that when we get to 23 or 24, that's when not only you but other airlines get enough of breathing room that you can start to take delivery of aircraft?
Yeah, so we still got airplanes coming. We've delayed about 50% of our deliveries in the next couple of years. We've still got some long-range airplanes coming, so we can get Wilf's flights to London up and running. But so we're bringing CapEx down. I mean, we've talked about this, Phil, in 3 phases. The first one is to stop the daily cash burn. That's where we're focused right now. The second one is to build back our margins And that's going to be something we focus on as we go into 2021, and then repair our balance sheet. And by removing a lot of capex over the next couple of years, we create the capacity to repair our balance sheet and get our long-term debt metrics back to where they were before this pandemic.
Shepard Smith here. Thanks for watching CNBC on YouTube.